Well, it looks like we had a stellar move in silver. It's up $1 today, and a lot of that is because the fiscal cliff has been inverted, but that's not the only reason. Okay, I know, like now that the traders, U.S. traders, are getting back in the action again, it's like okay, fiscal cliff has been inverted, but there's something coming up that is actually going to be worse than a fiscal cliff in maybe a couple months, 2 or 3 months. I'll tell you what that is in a little bit. But also, besides the fiscal cliff being averted on the wee hours of right before midnight on January right before January 1st on 12/31/2012, they only had a couple hours to go and they passed everything. Well, besides that being averted, we also seeing PMI data, primary manufacturing index data coming in, preliminary stuff coming in from Asia, Japan and Korea, and also Europe, Germany, and everything else, looking better than expected. Better than expected. So that's always good, bullish for markets, always bullish for silver, gold, platinum, palladium, oil, and base metals, agriculture, you name it. So silver's up $1 today. Platinum and palladium are moving up. Well, gold has been moving up, but especially silver and, of course, the industrial metals, platinum and palladium. Now, I want to point out platinum is still worth less than gold in dollars. Okay? Crazy freaking thing to happen because on average it's worth 1.4 times more than the price of gold. It's not less than gold. But actually, if you take out a period of times of recession, and you just look at normal times when production's good and things are looking okay, platinum is worth twice as much as gold or more. That's during normal times. So right now, it's platinum is a good deal, and I've been mentioning this. Actually, I'm in some platinum, but palladium should be worth more than platinum, long range. So I want to mention that again. Everybody hates me for saying that sometimes, but palladium is always a good deal for a long range hold. It may do better than silver. It may. It probably is going to do better than silver long range. Now, the silver ratio is like around 54 to 1. I expect it to get up to about 30 to 1 before it has another correction. But when you say 2014, 2015, silver's going to probably be below 20 to 1 on the ratio. So wherever gold is, saying it's sitting at, 3,200 an ounce, silver's going to be around, I don't know. It's probably going to be well up over 100 easily, way over 100. So, like $150 an ounce at that time. So, like today, oil's up, Dow's up, and everything. Now, I'm going to point out something else. As they raise the debt, when they're going to go to raise the debt ceiling, that's going to be the next big hurdle. That's where the fight's going to be. Actually, if you look back to August 2011, when gold went to skyrocketed to new heights, it got over 1,900 and actually hit its all-time high on September 6, 2011 of 1921. It turned out that was because of fights over raising the debt ceiling. It wasn't over like budgetary fights, cutting taxes, not cutting taxes, tax expirations, what the budget should be in some department here and there. Hey, they can always agree on spending lots of money. But when the money runs out, they always fight over the debt ceiling. And it's almost like, why have a ceiling if they keep raising it? So this is where the big fight's going to be in about 2 or 3 months, raising the debt ceiling. So here we have the bike repair station. This is Bernanke's personal assistant. She's repairing his bicycle. So Bernanke's into bicycles too, believe it or not, and he has a personal assistant, of course. Anyway, but when they raise the debt ceiling, that is going to be I don't know. They're going to have to raise the debt ceiling because actually this fiscal cliff thing is turned out to be so much BS because they didn't really go over it. Did they practice austerity? Hell no. The United States is not going to practice austerity until it's forced to. That's what I was thinking. I was thinking maybe they'd go over this fiscal cliff a little bit, play hardball to the end. But they didn't even do that. I just figured the end result was going to be they're going to spend more money. And they are. Actually, this budget is an increase in spending. So, ergo, the debt ceiling is going to have to be raised, and that's coming up in about 2 or 3 months. That's where the big fight's going to be. And Mark Farber warned about the equities markets. Look what happened in August of 2011 when the debt ceiling had to be raised and all the fights were over it and they weren't going to do it. It was like they did it at the last minute. The equities went way down. Even oil went down. But I wouldn't bet on oil going down because there's that wild card Iran in the equation. But equities went down and gold went way the hell up. So the debt ceiling is going to be the big issue in about 2 or 3 months. So can Bernanke fix it and his assistant fix it, at the bike repair station? I doubt it. It's almost like there's no complex formula involved. It's like you're spending more money than you got, government. What's the problem there, right? And so, anyway, it looks like, for now, gold and silver and everything else, including, the Dow, the oil, the base metals, everything's flying upward because of, resolving the fiscal cliff. And also PMI data is coming in that's positive. They're all over 50, plus they're better than expectations. That's all the preliminary PMI data. Now, these numbers might be fudged. So maybe, a little later on, you might see some other numbers start trickling in over the next upcoming months showing that the PMI is going down a little bit because, during the end of the year, they always like to make things look great. Don't matter what country it is, they all like to paint a rosy picture. It's BS. But hey, it's good for the metals for now. And the fact that they're getting a little run up is good because I think the next run up is going to be when the debt ceiling gets argued about. That's going to take about 2 or 3 months, but that's going to be stellar for gold and silver. And let's hope they keep continuing upward. And then when a debt ceiling fight comes, they continue and they get another major blast. So, but long range, expect, the way I think this is going to play out. War with Iran, I'm assuming it's going to happen. I don't think it's going to be World War III. That might be later on, but I don't think that's going to be the initial spark that starts everything. But war with Iran, it's going to be over with. In other words, if it happens, it's going to. Whatever happens is going to happen, but it's going to be over with at one point in time. Initially, it's going to drive up gold, oil, and silver very hard. That's where we might see this next spike to silver going to $60 to $65 to $75 an ounce. And then it pulls back some. And then 2014, 2015, when the government really runs out of steam and they can't sell bonds to anybody and, everything's really falling apart. Nobody wants the world reserve currency, the dollar. That's when you're going to start seeing silver well over in the 3 digits, probably 150 an ounce or whatever. Gold might be at least $3,200 an ounce. The ratio of gold to silver might be 20 to 1. So, that would bring it around, over $150 an ounce for silver. I don't know. I mean, I think if you're looking at, it looks like we go in 3-year cycles approximately with silver and gold, roughly, where they hit these really high peaks. So that would put it around 2014, really. So, but in the meantime, the debt ceiling, raising the debt ceiling, that's going to be the next thing. That's going to kill the equities if history is a good indicator of what happened. Like, if you look back in August 2011, and it's going to make gold hit a record high. And silver's going to help silver out a lot too. But figure that's going to be in the next, that's going to happen in about 2 or 3 months when that comes up. Because this fiscal cliff wasn't no austerity. They're spending more money than they ever have. So the debt ceiling is going to be a major issue that's going to be coming up earlier in 2013.